Everyone, this is Chris from solstice.axle.atrai as well as axle.atrai. You can find us on the website. So basically, we use this adaptive algorithm that's built by traders as well as institution players for the side market, up market, as well as the down market. Remember, use at your own risk. We're not a broker dealer. If you'd like to check the website and get a little bit more information so you trade in a better way, so you don't get caught and never trade alone, so you need to learn, understand the risk involved, protecting capital when the market is down or up. You know, what is your assets you're willing to put on the line in relationship to what you're willing to lose. That's rule 2, protect your capital at all costs. Don't be wrong. Number 3, when there's an action in the market, let the market tell you what it's doing. Don't be biased because you're listening to the news or something else. So trade what the charts offer you. So the action and reaction in the market, whether it's on the short term, long term, midterm, don't question the move. By the time you question it, you're too late. So that action and reaction is kinetic energy of people's emotions and that are involved, whether it's going up or going down, or the market is just sideways consolidating for a second move. Number 4, make sure the winner don't turn it into a loser. Money will flow. That's the most important thing. Let's go to the first slide that I have up here. And I wanted you to be aware that you can find us on those slides. I do a morning, a small tweet on X, pre-market. That way you can get an overall view of what my thinking is for that day. So I give a general idea, and usually I give 1 or 2 trades on the day, what to look for and what are the stocks you're looking for in order to trade these levels. So let's go last. This is my YouTube weekly video. I do it for everyone for free. Try to learn. I know it may sound a little bit gibberish, but the most important thing is over time you'll start learning the technicals, and that will help you understand market, in which direction it is moving. When you're in the battlefield, you want to be able to use your weapons. You're not going to come in with a knife when someone has an axe on you and you are biased to one side. So you're going to use that knife basically to take that, dagger someone, like Brian says in my group. So it will help you take these little pieces. Remember, the sharks are the whales in the market. You're the little fish, around there trying to nibble on the leftover in the overall market. Let's go to the first slide. And what I did, I put the Russell 2000. And in the Russell 2000, I said the annual chart from basically May of 2025 till May of 2026, we can see that the December high that was made in 2025, we reset in January, rallied up, created a head and shoulder on the IWM. We fell down and we created an island reversal on that tweet on Donald Trump talking about, hey, the market is going to be continuing higher. We're going to have a ceasefire in Iran, and we pushed up. Then we did another island, but that island, you can see, it still never tested the prior high or this island reversal. Even if we come back to this way, to the bottom of this consolidation here where these candles are, it is okay. But if there's going to be continuation, we'll look for the backside of that linear regression uptrend channel. We are a little bit on a sharp uptrend channel. And what I want to do here is basically show you the uptrend channel. Most people would not draw uptrend channels. I do draw uptrend channels for breakout and breakdowns. It'll keep me in line if the trend is up. And you can see that this linear regression channel, we are in an uptrend. This is the 100%. This is the 0 line. And you have a midpoint here still going up. If there's going to be continuation, the expected measured move on the charts in IW. And I'm usually using the M, which I wanted to show you the value instead of the growth one, or the technical, which is the tech part of the sector, which is the F in the IWM. Let's go take a look at the Russell micro 2K. I don't know if there's anything on the micro 2K. I do have the Fibonacci's that are from the prior year fibs for the year. And you can see when we went up in January, February, when we created that head and shoulder, and we eventually fell back down, rallied back up. And you can see the machine here grab that linear regression uptrend. I'm going to activate it and I'm going to push it down to here, or just we can remove it here. Let's remove it, remove the drawing. I'm going to grab this low here to this high here, and you can see we are in that linear regression on the micro NQ. So let's go now to the QQQ, which is the NASDAQ 100. We have the semiconductor SMH and the XLK part of the NASDAQ 100. This is the QQQ ETF. You can see the prior double high from the 2025 and 2026 high. We fell down. We got that tweet in the market, rallied up, we continued, but we do have these, usually these island reversals are usually retested. I just want to show there's a gap here. These gaps were filled. There's these gaps here. I did not mark them, but I wanted to show you that they are, and there's some on the left. You can see those ovals that never been retested. This is a large move up. We continued, and we can see here, this was the low here on candle was 642.21, and the high of this candle was 642.18. There's a tiny little island here, which we continued higher. We retested this one here, rallied back up. This was from the Tuesday, Wednesday, Thursday, Friday. Thursday was a large bar going up. Momentum, we got a new breakout and a new high on Friday. But on Friday at the close, the institution were still buying. So you have to pay to the QQQ attention in relationship to that semiconductor. Let's take a look at the micro NQ. And let's go here, micro NQ. And what I want to do here in the micro NQ, I wanted to show this consolidation here, which I had marked for a long time. I am no longer going to keep it here, remove it. This is the prior month volume profile, value area high, value area low, and value area low. That's the point of control. I would need to move them for the April level. So I will show you how to do that next. But I wanted to show you this consolidation and the rally in here, and we pushed higher. So we know that level coming back even halfway, or if we end up coming a little bit, if there's going to be a shoulder, head and shoulder, it creates that head and shoulder to continue higher. But if there's going to be continuation, you want to see that linear regression channel not to be violated. If I connect this dot with here, you can see how sharp this uptrend is. And if I grab this candle from that island reversal to this one here, we are in a sharp uptrend where the RSI is getting a little bit too extended, and we're going to make sure that we don't run into it. So what I'm going to do here in the style, we're going to go to the standard, from standard to the monkey bars. The monkey bars have the volume profile, value area high. This is where the shadow is, value area low, and the point of control is where most volume. These are the canyons and the valleys. Where there's high volume, it's just a higher node, which is higher. This is the time spent here on a 30-minute, 3 days. So what I want to do is go to the daily. You can see this was the daily. Let's see, this is a daily 3 month. Okay, this is the daily 3 month. So this was the prior month. My point of control, I'm going to move the value area high from here to this area here. Since the point of control was touched, so I am required to move. It was actually here, so we're going to move it up here to where the point of control, where most volume is, and where my value area low is going to be here. If I end up zooming here to know where my value high and low, all I have to do is just come in here. You can see those numbers. The number one, this is basically a runaway freight from Thursday on that push up. That was the close that month for the month in the NASDAQ 100. Let's take a look at the point of control where it is. I'm going to zoom in so we can anchor it correctly. I usually put them in the center of where the shadows are and the highs and lows and the point of control. And you can see here, I didn't anchor them correctly, so I'm going to push it down here. That's where your NASDAQ 100 value area high, point of control, and a value area low. I do have these virgin control points. I usually going to take them off, so I don't want to complicate it. Remove the drawing. I'm going to remove this drawing here as well, just to show you on 10 days or 20 days. And I'm going to go to a 10-day chart to show you how they will look like. 10-day, 30-minute. So this is the point of control. You can see between here and here, the NASDAQ, when it came back in the overnight, it tested the the Thursday's high. This was the Friday. You can see it came into it and ran back up. Let's take a look at the Russell IWM, which I did not show you, RTY. And I'll go back to the S&P 500. You can see the Russell in the single prints from the prior 2 days up. Let's just zoom in here. We can see that single print here. If I zoom in from here, from the low here on that single print to the high that was created, you can see that there was a single print in this area. We only tested this one, but we didn't test this section here, and we ran further up. This is telling me that there is strength in the market, and we continued higher. And you can see where the Russell went up in the day, came back, that's what, and came back to close right here for end of the day in IWM. Let's do the S&P 500 now. Let's go to style. We're going to go to bars. From bars, go back to standard. I'm going to use the SPY here, SPY. And I wanted to show the SPY has 11 sectors here. We can see the prior year's high here, where it was in December 2025. This was the January, February. Then we fell down in March. That was the low. We had this island reversal after the tweet, Iran, the war. You can see those value areas, and we pushed up higher. We got an island reversal 1 here. I do count this as 2 because there's a gap here. This is considered 3, but this was retested here. If I zoom in this area, coming back to this area halfway where the consolidation happened is great, but I can see that this linear regression is coming from 12, 16, 20, 21, and this is the uptrend channel. If there's going to be continued, because we had a reversal hammer down in the S&P 500. So this is in the S&P. Let's take a look at the a micro ES, and I'll do the measured move for the micro ES and the S&P, and I'll show you the Mag 7. So you can see in the micro ES that push up, that was the prior week. This was the Friday, Thursday, that was a big run. Wednesday, Tuesday, Monday, we looked up, we failed, tested this consolidation and rallied up. Even coming back to the top of this area here is going to act as support. If there's going to be more resistance coming in, I'm going to pay attention to that high that was made on the prior day on 427, because this was the Thursday candle. This is the Tuesday, this is the Monday, this is the Friday's high, or the Thursday's candle, because this is the Monday's high. So what I'm going to do, go to the style. I want to show you the monkey bars here first. We have the hourly chart. Let's go to the daily 3-month. We go daily here. We're going to do 3-month up in this area. From the daily, you can see where the value high is, the value area low, and the point of control. This was the prior month level. So what we're going to do is grab this, put it at the high here. We know what that level is. We're going to grab the point of control. Usually when the point of control is retested, it's no longer valid. You can see I have a lot of markings on the right side. I'm going to leave these alone, and I'm going to grab this and put the value area low right here. And you can really anchor them. When you zoom in, you can anchor these shadows to know where your market profiles are. You can see here, I'm going to do it, but we're not going to spend much time, beating a dead horse, because usually coming back to the point of control or testing the value area high when you're running very high, you want to come into it and bounce off it. But if there's weakness in the market and you close inside the bar, then you look for the point of control. And if it bounces off the point of control, you look back up. And if it breaks through, it's to the downside. This is just on the monthly, but I wanted to show you that on a 10-day, 30-minute. And you can see that when we came up in this area here, you can see the prior week's Friday. You can see we retested the Thursday high, and we basically continued up with no regret to the market. That's your value high, that's your value low, and point of control. We basically we looked up and came back in to close down in this area. So very importantly on the daily bar, so we're going to go to style, go back to standard, and I wanted to show that standard. I want to show you how to do the measured move on that chart. We're going to grab to activate this area. We're going to go In here, we're going to go 10 day, 20 days, 1 hour, which everyone can see. You can see in the prior week where the consolidation was, this was the Friday's high. We retested the Friday, rallied up. This was you can see the island reversal on the retest, the rally up. Then this one here, the Monday low, this is the Monday push up, the push down and rally up. But I'm here showing you without the overnight. If I do put the overnight, I go in the style, I go in the setting. Watch this. We're going to put the overnight. We're going to go to futures. We're going to highlight and extend the overnight action, as well as the equity. Highlight and extend the overnight action, because this is the European Asian markets. So all I have to do is zoom in here. This is my high for the week. This is my low for the week from that Wednesday. So I'm going to go get the measuring tool. This is my high for the week. This is my low for the week. And what I'm going to do is extend it to the right, and I'm going to change the color to baby blue, edit the property. We're going to make it baby blue or cyan, and we're going to extend it to the left. You can see here the date, and I'm going to go back to here 415 or 4101. It's okay. So at least you can see where those levels are. When I zoom down, I'm the expected move coming back down. If I'm going to lose the 50% in this prior high, this is the 71.16.15 area. You can see that this high in the overnight, or this price action here, the prior Monday's high or the Friday's high, is very important in that S&P 500 on that measured move. And if the extensions are to the upside, you can see from 0 to 100, you have the 200 to the top minus 100 to the bottom. Let's do the same thing with the SPY, and I'll go to the Mag 7. So you grab this area, zoom in, grab this high from this area to this low, and you can change the coloring. I just want to show you that the toss only gives you 0 to 100. They're all in red. I do make them into 20 units of 25, so that way you can calculate the numbers a little bit easier. And I'm going to go to 4101. Push that, and you can get the levels for the weekly expected move in the market in case we do come back. And that this area here, the $716 in the S&P 500, you can see it here, as well as this area here, 715.50, is very important in the S&P to hold, unless we create a shoulder, come back down and break through it to the lower side. So I hope this is helping you. Let's take a look at the Magnificent 7, Mag 7. MAGS. I don't use this one, but I wanted to show you that there's consolidation between, Apple, Amazon, Meta, Microsoft, NVDA, Tesla, as well as, I do include in the Mag 7 myself, other than Microsoft and Meta, I include Netflix. I'll show you how it looks like. Oops. This one has actually, you can see that I drew this linear regression uptrend trend when we pushed higher, removed the drawing. You can see that this push, we have been in consolidation due to the difference, earnings reports between, the Intel of the world, the Microsoft, the MUs of the world, AVGO, and so on. I just don't want to go in detail. I can show you the earning on Apple. This is Apple. I'll show you Amazon. I'll show you Google. On a short term, I'm going through them very fast. I'll show you MU. I'll show you AVGO. This is INTC. You can see it. And I will show you NFLX. And I will show you Hood. And I will show you TSM. The semiconductor. So you want to make sure when you're trading something that you are understanding the risk involved, so you're not on the wrong side of the trade. Last but not least, once again, let's go to the micro ES, and what we want to do, take a look at it on the daily chart one more time and understand the risk involved. This was the consolidation in the price. That means if we're going to come back here, that's going to be some major work, because not a lot of people are talking about the changes in the trend and what's going on in the Middle East. So you have to pay attention to the earnings, as well what the Federal Federal Reserve Board going to do regarding interest rates, because I think they're going to increase it. And this is where the consolidation and the highs happened in the prior week, even coming back to this area here, finding support and continuing great. But if there's going to be a breakout, pay attention to it. If there's going to be a move down, look for the right shoulder to be formed on the S&P 500. I hope this video was helpful. If you have any questions, you can check us out at solstice solstice.axelatrai.com. Take care, over and out.